What's going on, buddy? Jeff here. Welcome back to the channel. All right, guys, AMC continues to sell off while Ape is rising. I want to talk a little bit about the reasoning behind this. I've had a lot of people reach out to me, private message on Twitter, comments on YouTube, individuals inside the group asking me why this is happening. So in this video, I'm going to explain it. This is 100% factual based. None of this is subjective or speculation based on the unique situation that AMC is in when it comes to short sellers, Adam Aron's motive, etc. I'm going to explain everything factually based first to give you at least an understanding. And then we're going to talk about what some of the outcomes are when it comes directly pertaining to the reverse stock split, as well as if the ape conversion is approved. This is going to be a very, in my opinion, an immediate reaction. Okay, I'm not going to talk about the leading up to the potential split. We're just going to talk about what would happen if the split does go through and why these tickers are moving the way they are right now. So let's get right into it. First off, as you can see here from the announcement, Ape is up from somewhere around the 70-cent range to sitting at just under $2. It got to a high of, I think it was up about 230%. Meanwhile, as soon as the algorithms picked up on the trigger words of AMC offering, they immediately decided to sell super hard. Anytime these algos hear offering, it is dilution. It is a short, seller's, paradise. The algos kick in. Anybody who's long the stock immediately sells. Anybody who wants to get short, decides to short it. It happens all the time, and it's exactly what we saw here. We saw a little bit of a recovery, a little bit of a squeeze, trying to get some of these shorts out that picked up on this move down to a slow grind to the downside. Ape is moving completely inverse to this. So first of all, why is this happening? There's a couple of reasons for this, okay? The first one is the fact that Adam Aron wants to convert Ape to AMC, right? So basically, if this was a one-to-one conversion, meaning your one Ape would become one AMC, anybody who has an interest in potentially owning AMC, which is currently trading at $4, can scoop up that price of whatever Ape is. Now, this is still in the works, and this is not guaranteed, okay? So that's why you are seeing Ape, which is the lower priced equity, move higher and AMC move lower. The reason why AMC has to move lower is because the overall market cap. Okay. So what I mean by that is, let's say you have $100 to your name, right? Whether that is two $50 bills, okay, five 20s, a couple 20s, a couple 10s, and so forth. You still have $100, right? No matter what the combination, okay, of currency you have, if you trade it to somebody, if you move it around, if you deposit 100 singles and then go to withdraw them from the bank, in a different currency, whatever it is, it's $100 bill. The overall thumb is still $100. So the overall market cap of AMC and Ape is still going to be valued the same based on where the tickers are currently trading as of right now. And there's numerous different reasons for why AMC or any company's market cap is the way it is for right now, whether it's based off of future revenue, future valuation, whether it's beaten down by the current economy, whether, people think that there's going to be another crazy COVID lockdown, or we're going to go into a massive recession and movie theaters are going to, be penalized due to lack of, interest or lack of funds by consumers being able to go there. Whatever the reason is where that market cap comes from, okay, and where that valuation comes from, what investors feel like it is, currently valued, what is a good buy and what is not a good buy, okay? So that is some of the reasons why you are seeing AMC being pulled down. I hear that, like, oh, well, if you could buy Ape, or, if Ape is going to be converted potentially into AMC, well, why is AMC being pulled down? That is the reason, okay? Now, why is both of these tickers not traded at the same dollar amount? For example, okay, Ape was trading at around 60 cents. AMC was just five and change, a total of $6. Why are they not being traded at $3 and $3? And the reason being for that is because the conversion has not been approved. Okay. It is not guaranteed. meaning anybody who wants to take this bet long is not going, it's not guaranteed that it is going to become AMC. Therefore, there is a little bit of risk involved, all right? And they want to obviously have a bit of a higher reward, which is why you are seeing it somewhere around a 2-to-1 ratio that will vary based on, natural buying and selling, natural algorithms, as well as what is being heard behind the scenes. Okay. Now there's, very easily news can get dropped, behind the scenes of, listen, this approval is going to go through. It's not going to go through, and you're going to see a massive price adjustment in both tickers. Okay. Now let's talk a little bit about just the cycles and the potentials of what happens if the conversion is improved. Okay, we've already talked about in my previous video, what is the natural cycles of stocks during reverse stock splits. Unfortunately, the history based on them is not always, very good. There are obviously unique situations. We are also in a very, very tough market as of right now, and we'll cover that in just a moment. Okay, so if the conversion gets denied, right? If there's news drop that, let's say, even Adam Aaron pulls something that he did about a year and a half ago where he says, listen, I already know my shareholders are not going to, approve this. They're not going to, go through this, whatever, information he has, and he decides to pull that, you will immediately see APE plummet right away. The algorithms are going to pick up on it. They're going to know, listen, why we are betting on this stock as of right now is no longer on the table. Therefore, you will see APE pull back. AMC will, most likely, pop a little bit, obviously, because the valuation and the market will adjust. Now, if it does go through, if we get to vote on it, it goes through, there is approval. Obviously, you're going to see an inverse effect. You're going to see AMC pull, and then APE is going to pop a little bit because it is going to be converted into AMC. What happens after that? Well, that's where things begin to change a little bit, because now you are essentially dropping an offering, okay? You are raising the total float of AMC, and you are diluting it, okay? And this is not talking about the reverse stock split. We've already covered that. This is purely talking about the conversion. That's when the market starts to adjust a little bit, and therefore most likely we'll see a pull, okay? So rewatch this video if you have any questions when it comes to what are just the natural cycles of when there are situations similar to this, okay? And I understand we're talking about a preferred equity that has to get converted over into common stock, but it is very, very similar to an offering. And what I just explained to you is the reasoning behind, APE moving higher, why AMC's, stock is moving lower, okay, why they're not trading at the same, value as of right now, and what happens whether a conversion is confirmed or denied. Now, when it comes to the shorts involved in this, when it comes to longs looking to squeeze, when it comes to, other market cycles, that is completely separate. This is just talking about the, current events, at hand as of right now. Okay. Now, when we were talking about an overall, stock squeezing and so forth, guys, let's not forget, okay, that Tesla was one of the biggest and longest squeezes that we've seen. Okay. Now Tesla's valuation has been based on, promised, changes, promised releases, insanely future valuations, and it's really starting to get picked up on that. You look at this 5-year monthly chart, you can see we were merely flatlined until it broke out, and it literally just went 10x from less than $40, $35, all the way up to, okay, obviously a stock split adjusted price of $400 and almost $15 at a high. And clearly you can see it is beginning to sell off. The short sellers are capitalizing on it once again. Now the market continues to run in cycles, and we talk about that. And while we are at a very, very unique situation and a unique time right now of quantitative tightening, we've got recession looming, we've got some serious, okay, financial, liquidity issues happening right now, the cycles will eventually turn over, and the shorts that do not get out of these positions will be punished, right? Whether that squeeze matches up to your perception of a squeeze, okay, or that squeeze matches up to my perception of a squeeze, which chances are two completely different things. That is up for debate, okay? but eventually the cycles will change and the pressure will be put on them, okay, which is the shorts. As of right now, market wide, the pressure is not on the shorts. And you can see that it's not just AMC, it's not just AMC manipulation, okay? It's the entire market and it's every ticker that shorts have been pounced on, okay? So, guys, that's it for this video. I hope it explains it. I'll see you in the next one.